Some analysts wind up saying that you could add about $5 to $7 a barrel for oil if you have an extended 3-month-plus oil crisis. What do the charts point out to you?
Right now, some stars are aligning in the technical charts for WTI crude oil futures, and it's actually at a very important juncture right now because the rally that has occurred off of the 10-month new low this past June has risen to the top of the downward sloping channel that oil prices have been in ever since they topped at around $50 to $55 a barrel. There was a rather large ascending triangle top that formed in our technical charts up at about 50 to 55. That's what started this massive decline in our view, right? So at this point in time, oil prices through 50 would actually be interpreted technically as a bullish breakout. It rallied right up to it on Friday's close. I believe it closed about 49.30 or so, and it's sitting right there this morning. One leg higher, and we do actually have a technical breakout. In my view, though, as long as that level holds and some of the seasonal weakness that we have coming ahead, I think right now is actually a decent point to take a shot at selling oil.
I love the stars are aligning because I've got to say sometimes technical charting can seem like that, like astrology, right? It's sort of like, if we dig in here, we look at this, the triangle formation means X. How accurate are some of these predictors?
Sure. So there have been many studies across.
Sorry, I am.
I'm in the technicals. I get it. These macro guys.
I'm just like, we're talking about Venezuela. If the U.S. were to stop buying from them and they were to collapse.
But hold on a second, because last time when we had a significant disruption in Venezuelan oil, we had a 40% rise in crude. So where we are in terms of breakout is really important because will we see a kind of 40% rally now? And that would be enormous. Or are we going to see some kind of cap?
And it will be. And I think if you concentrate on, what the chart is there and meant to tell you is that market actions attempt to discount everything into prices, right? So right now, all of the information that we have as investors and traders should be discounted into the price of crude oil. So whether or not the threat of, these sanctions against Venezuela happening or not, right now the market is telling us it's not going through 50 yet. We don't think it's going much higher. And the last few times that prices have risen to the slope of this downward sloping bearish channel, the market has sold crude oil prices. I think something that's interesting that actually occurred over the course of July was the average highest price for crude oil over the last 10 years was July 5th. This July 5th, Russia came out and made some comments about maybe increasing supply, and crude oil prices plunged, right? History repeats itself. It's one of the 3 premises of technical analysis that is very important to, making our forecasts and anticipating market direction. So, again, oil up here at 50, you could probably sell spot. Maybe you buy a call to protect yourself, given that there's macro factors like Venezuela, potentially Russia, potentially North Korea, that could certainly cause a spike and protect yourself in that trade.